Good evening, good evening. Chalo, ¿qué pasa? Let's do this. Let's do that. Let's do this. Let's do that. Dak is here. Kofi. Mateo. Is that right? Mateo Garino? Is that right? Garino. Cool. Mine's Gardino. Yours is Garino. Cool beans. Sam, Brian, Jojo, Gerson, Andrea, Charlo, Lou, Silk Schrocket? No, Silk. Okay, whatever. Copies and pasties. Uh-oh. I know what pasties are. I know what copies are. I'm not quite sure what all the rest. Roa, how you doing? Well, let's get started. My name's James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Darvin Lee, how you doing? Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for a ride for a safe, predictable, consistent 1% per week. Let's jump in. It is the 3rd of September. We got 4 weeks to go before the end of the 3rd quarter. Bill and Chloe, how are you? Jalen, how are you? Hassan? Dusty James. You know, I was dusty this afternoon. I was doing some sanding on some woodworking projects, and they called me Dusty James. Probably not the same one, but okay. Boomba! It's been a while. Haven't seen you for a while. Gerson, how are you? Davey D. All right, so let's just jump on in, get started. Picked up where we left off last night, and we left off last night with Solana. What the heck is Solana? Solana. ANA. Osprey Solana. Solana. Yeah, no options on Solana. That's going to be a no. Lowe's. Gotta love Lowe's. Gotta love me some Lowe's. George, how are you doing today? Al? NR Legend, how you doing? Christian? Love, how you doing? Roberto Parvez. ¿Qué pasa, amigo? ¿Cómo está? Taco, ¿cómo está, señor? Logan Green, how are you doing there, Logan Green? Well, let's get started. Lowe's, I love Lowe's. Lowe's is a dividend king. Basically, what does that mean? Well, they've been increasing their dividends for more than 5 decades. I love Lowe's. I love Home Depot. Buttercup. Nice. Chocolate Kisses. How are you tonight? All right, well, let's take a look at Lowe's. Here's our high. Here's our low. This is where we were a year ago. Here's where we are now. The 245 is going for 265. Okay, barely 1%. We got 3 days left. Okay, we got a little gypped out of Monday, but okay. Mark Todd, Mark. What was that? Martinelli. That sounds Italian and a half. Todd, Mark French. Comment ça va toujours, bonsoir? I don't know. Might not even be French. Todd Cass, Jay and Jalen. Okay. Art Thomas. A Trout 86. I once caught a trout. Yay big. Okay. Gil. Keys, Beauty and Lifestyle. Cool beans. Alec Perez. How are you, Alexander? All right, let's get moving. All right, so here we are. Now, there's only 3 days left to this week. Wednesday, Thursday, Friday. So usually on Tuesday, which is today, we usually go and look at next week's options because this week's only got 3 days left. And don't get me wrong, Lowe's is a great company. The premium for Lowe's should be a little bit higher. Okay, but it's a little bit low only because we got 3 days left. So if we take a look at next week's 245 was going for 415. Well, that's way over 1%. Do I have a book or a course? Believe it or not, I've written 13 books, I think. And I have an old course, but it's so old, it's so outdated. I haven't come up with a new one yet. I just want to figure out how this is going along if people actually want it. So actually a lot of people have been asking me for it, so I guess I got to throw one together. Needless to say. All right, so a year ago, Lowe's is sitting at 231, drops down, hits the bottom at the end of October at 182.22. How do I know when to buy or sell? Finley, how are you doing tonight? Now, Finley, I show you what I do. Okay, I'm looking for a safe, predictable, consistent 1% per week. Now, I do that using a covered call strategy, using good quality dividend stocks. Now, I have a certain formula, you might want to call it steps, kind of paint by numbers, okay, but one step at a time. Step one, then step two, and then step three, and so on and so forth. So let me show you what I do and see if that helps you out. Michael Sinclair, over here on Instagram. All right, so if we take a look, first off, the number one thing you want to do is find yourself a decent set of stocks to look at. Okay, first you want to find, this is step number one, find a decent set of stocks to look at. Now, the stocks you see here are the ones that, well, some of them that I like. Now we have MPW, Occidental Petroleum, VFC, Halliburton, Nordstrom's, Bank of America, General Motors, Kimberly-Clark, Pepsi, Devon Energy, Coca-Cola, Macy's, T. Rowe Price, Waste Management, Best Buy, Cisco, Comcast, John Deere, and a whole bunch of others. Now, the way I pick my stocks is I look at companies that have consistently increased their dividends. Austin, how are you? You're here early tonight, Austin. Way to go. I look at companies that are consistently profitable. Because, don't take this the wrong way, but it's my money, and I want to invest my money in a company that is consistently profitable. It's a stupid thing to say because you think that would be logical. But you guys have a tendency, I'm not talking about all of you in particular, but a few of you give me stocks to take a look at, and I'm thinking to myself, what the hell are you thinking? Putting your own money into something like this. Jose, ¿qué pasa, amigo? ¿Cómo está? ¿Cómo está, Jose? What do you think about the Walgreens? Ooh, if I got something for you. Now I'm going to wait for a little bit later on to show you the Walgreens thing that I dug up. Well, I didn't dig it up, but Andrea came up with it, and I'm not sure if you guys know who Andrea is. She's here. She contributes quite often. But let's get to that, picking them up. I'm going to get fired watching Thin. I have no idea what watching Thin means, Brad. You take a hit today? No. Silly question, but okay. So, let's continue. Now, when I say you got to pick a decent set of stocks to look at, well, because there's 9,598 different companies you can pick from any day of the week. Any day of the week, 9,600 companies. I'm kidding, foolishness. How are you doing? Good evening, Mark Sherman. How are you? You got CVS on the list? Yes, I do, Darwinly. We're going to talk about that in a little bit, but let's continue on for those people that are new, going over the steps. Step number one is finding the good companies to look at. Nazru, how are you? Rude dude, hey there. That's weird. You got two guys saying the exact same thing 2 seconds apart. Hey there, hey there. Okay, so first and foremost, pick a good set of companies. I like the Dividend Kings. I like the Dividend Aristocrats. I like the Dividend Champions. I like the Dividend Contenders. And I like Warren Buffett's list. So out of that 9,600 different companies, I only like about 300, and that's it. CLSK, Nazoo. CLSK is on the list, but I can tell you right now it's probably going to be a no. Foolishness, you think Walgreens recovers? Okay, foolishness, I got a good report to show you in a little bit more information about Walgreens that might change your mind. Okay, now I had someone do a little bit of research, do some digging to find out exactly what Walgreens owns. So we're going to get to that. Doc, you want to take a look at Riley? Doc, Riley's already on the list from last night. How long have you been doing this, and how did you start off? Well, Finley, that's two different questions. Okay, I've been trading since not early 90s, the early 1990s. Now, the reason I got started because I had a manufacturing company, had a bunch of employees, I was making money hand over fist, had to figure out what to do with it all. Does your covered call automatically expire once it reaches the day of maturity, or can you roll it? Gerson, great question. Now, the question you ask has two different, I can't figure out the exact word for it, but one option. Now, I buy on a Monday and I sell the covered call on the Monday, which is first thing in the morning. And that option usually expires on Friday. So when Friday comes, you can call that maturity. Okay, I have two choices. That option is going to expire and I can roll it forward. Big Pasta, did you ever hold over the weekend? All the time. So on Friday, Gerson, Friday at 3 o'clock, I jump in and I see where all my positions are. Because remember, the options expire on Saturday, but you can't trade after 4 o'clock on Friday. So at 3 o'clock, I sign in and I take a look at all my positions. I got about an hour to do all that work. It only takes me 10 to 15 minutes, but I want to spend an hour to make sure everything is right and I can answer all the questions of the students that are following me at that time. So I cannot answer the question on a Tuesday about what I'm going to do on a Friday afternoon because everything changes so much. Mark, Walgreens sold a few stores to CVS. Well, that kind of makes sense. I forgot you want to take profit, so you wouldn't roll. Not necessarily so, Gerson, because today I rolled 3 stocks because I did a foolish thing this morning. I was looking at it and everything looked kind of interesting, and I figured I'd do one, but it went the wrong way. So to save the money and save from losing, I rolled it forward into next week. Got a little bit more money on it. Fine, if she goes through, not a problem. That being said, let's finish up what we're talking about. What I'm talking about is, number one, finding a good set of stocks to look at. Now, like I said, there's over 9,600 companies. I only like about 300 of them. Okay, now those 300 have consistently increased their dividends for more than 20 consecutive years. Now, you'd think that is a logical thing. But no, it's not. People buy hype. People buy rumors. People buy pipe dreams. Okay, someone says, hey, this is a great stock. It's going to go from here to here in about a couple of weeks. And then people jump in. Well, sometimes it does. Sometimes it doesn't. What's your favorite 3? That would be Macy's, Nordstrom's, and Kohl's. Right off the top of my head. All right, so Macy's is my number 1 pick for the year. So, that being said, once you have decided what stocks you like, I then take them and put them into a calendar. The reason why I put them into the calendar is it tells me when are they paying their dividend. Now, you may ask, why is that important? Well, it's important to me because before each one of these little green dots represents a company, okay? CAH is Cardinal Health, Mondelez, John Deere, STX, AIG, Altria, MPW, Occidental Petroleum, so on and so forth. The green dots represents the EX date. David, can you talk about CLSK? Narzu, we were going to look at CLSK. Give me a minute. Okay? Retail and consumer stretched environment. Okay, William, I'm not quite sure what you mean by that. Question, is that a question or is that a statement? Anyway, that being said, each time one of these stocks come up for a dividend, just before the EX date, 2 weeks before the EX date, the stock has a tendency to go up. William, what's the question? Stocks have a tendency to go up before the EX date. So if I buy it before the EX date, VICI, never heard of them. VICI, but we will take a look. Could you ever lose your 100 shares in a covered call? If so, how? Okay, here's an idea. Let's say hypothetically I bought 100 shares of Ford. Okay? I could lose those 100 shares of Ford if the earth opened up and swallowed everything that was associated to Ford. Okay, what about Walgreens? Walgreens has 8,700 stores. If I buy 100 shares of Walgreens, well, the world would have to open up and swallow every single Walgreens store. UPS. Did we look at UPS last night? UPS. We'll look at that one darbenly. Kevin, HPGLY. HPGLY. Now, Kevin, I'm going to pick on you for just a little bit because you did exactly what I told people not to do. Throwing out a company I've never heard of. So, Kevin, I'm going to take a look at HPGLY and I'm going to say, what the hell are you thinking buying something like that? So let's go take a look at it. HPGLY. Okay, no options, that means no. Okay, look at how choppy the chart is. Up, down, up, down, up, down, up, down. There's no rhyme or reason to it. Okay, so let's go a little bit deeper. Let's go to Yahoo Finance and find out what HGLY does. HPGLY. Okay, so Hapag-Lloyd, what the, I have no idea what that even means. All right, so let's take a look at how often do they pay dividends. Well, here's the thing, Kevin. They've only paid dividends 4 times, and there's absolutely no consistency whatsoever. Look at these numbers. In 2021, they paid $2.14. Okay. 2022, they paid $18.26. So you might be thinking to yourself, holy shit, they went from $2 to $18 and sharing the profits? Awesome. Wait a second, hold the phone. Look at this. In 2023, $34.33 a share. That's freaking awesome. However, from $34, they're down to $4.96. Well, that's a huge red flag. Okay, look. From 2012 to 2021 to 2022, extremely profitable. Look at the amount of profits they've given out. 22 to 23, well, they made even more money. Awesome. So what happened here in 2024? From $34 down to $4.95? No, and it's only 4 years of dividends. So where's the consistency? Where is the increasing? Where is the profitability? Why the hell would you put your money into a company that goes up, up, up? I don't even know what you call that. That is 535. That's 1/7. So it goes down. How much is that? It dropped 700%. Dropped 700%. Okay, so why the hell would you put your money into something like that? Which is fine by me. You can do whatever you want. Okay, I'm 60 years old. I can't afford to do stuff like this. Okay, I can't. Okay, I have no desire whatsoever to go back into the workforce. Okay, I've been working since 1973. Okay, 1973. Some of you people weren't even born then. But I've been working since 1973 and I just retired last year. You honestly think I want to go back to work? Hell no. You don't see us dipping into a recession in early 25. William, let me ask you a question. Because I get this recession question every week, sometimes twice a week. So here's the question for you. The stock market, well, let me give you a little bit of back story first. The stock market's been around for over 400 years. Okay, 1602 was the first dividend stock was sold. 1602. Okay, we're in 2024. That's over 440 years. Is that right? 440 years? No, 420 years of stock market, of buying and selling of companies and shares and profits and all that kind of bullshit. 400 years. So just in the last 100 years, here in the United States, what have we seen? We've seen World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash, all the wars over in the Gulf. You had the Gulf Wars, you had the Iran, Iraq, Afghanistan, and then you had the pandemic in 21, then you had the what do you call it, the stock market crash in 87. You had another crash in 2000 with the Y2K crap. And then you had another, well, the financial meltdown in '08. However, you have companies that are over 100 years old. Okay, you have Ford, General Motors, AIG, Bank of America, Wells Fargo, Colgate Palmolive, Philip Morris, Home Depot, Lowe's, all these companies over 100 years old, and yet they still continue to increase their dividends. So let's say, hypothetically speaking, we have a recession. So, do you remember the recession in '08? Remember when everything lost between 70 to 80% of their value? Well, Procter & Gamble was still increasing their dividends. So wasn't Colgate. So wasn't Wells Fargo, AIG, Bank of America. Okay, these companies consistently increase their dividends every single year. So there's a recession. Big deal. The companies that I'm looking at, that I'm investing in, well, they've increased their dividends in '08. They increased their dividends during the pandemic. They increased their dividends during the Y2K crap. Yeah, there may be a recession coming in, but we're always going to need toilet paper, toothbrushes, toothpaste, food. We're always going to need that. We're going to need to get the food to us, which is going to be, what do you call it, the trucking industry, gas, diesel, oil. Okay, even in a recession, we're still going to need heating oil to keep the houses warm. Okay, if you buy something that is a necessity, all right, if it's a necessity, no matter what happens, there's always going to be a market for it. Okay, now here's the thing. If you buy a company, let's get to one that's actually halfway decent. If you buy a company that's consistently profitable and consistently increases their dividend, and the customers, me and you, actually need the product, well, it's not going to go anywhere. So look at AT&T for a second. Right now it's at 20 bucks. Okay, so AT&T has a certain dividend they pay out every 90 days. All right? Now, if by chance I buy the stock at 20 bucks, which is the high of the year at the moment, and they pay a dividend, let's say it's $1. All right, now let's say, hypothetically speaking, it goes from 20 bucks all the way down to $5. Okay? But the company still increases their dividends. See what I'm getting at? So whether I buy it at the high or whether I buy it way down here at the low, I'm still entitled to the exact same dividend. So the person who bought it at $5 is getting the exact same dividend as the person who bought it at 20 bucks. So if you buy it at 20 bucks and it drops down to 2 and you don't sell it, well, you haven't lost anything because you still own a portion of that company. Now, AT&T has been around for over 100 years. You think AT&T is going to disappear just because a recession's coming? No. They'll tighten their belts. They'll keep on progressing, and eventually, once the recession is done and over with, well, we'll be back up to 20 bucks again. And then you don't lose. You never lose unless you sell for less than what you paid for it. And why are you going to sell for less than what you paid for it? Don't do it. Rule number 1, never buy something you don't understand or you don't want to hold long term. Always go in with the intention of holding it long term, and then never sell at a loss. If you never sell at a loss, well, you're not risking anything. Okay, if I continue to hold AT&T, so let's say hypothetically she drops down to $2. If I refuse to sell it, well, I'm still collecting the dividends. And every year, they continue to increase their dividends. And eventually, once the recession is done, or once the economy gets back to normal, or some kind of normal, okay, it will go back up to wherever it's going to go back up to. But never, ever, ever sell at a loss. All right, MasterCard, huh, you guys? Let's keep going. Did I miss anything? Hey, Salco, not much. We're just getting started. Oh, I missed all these. Tomorrow, earnings, DLTR, Dollar Tree. DLTR. Alrighty, SLB, Schlumberg. I like Schlumberg too. SLB. As a matter of fact, I think we bought some of that last week. Darbenly, FDX. FedEx. Let's take a look at FedEx. FDX. A well-run oil company. Yep. School, thank you. Sorry about that, Kev. That's funny. Kind of is. John Deere, we got John Deere around the dot-com bubble. Yeah, I remember the dot-com bubble in the what was it, early 2000s? 2001? That's early 2000. I own a mix of index funds and individual stocks in my Roth IRA. Well, I feel bad for you. I do. I do not like index funds. Depression. All right. 9/11. Yep, 9/11 was a good one too. Consumer staples. Correct. Good evening. Richard Bruner, how are you today? 1.4% this week. Nicely done. And use case doesn't always align with price action. All right, 7, I'm not quite sure what you mean by that. Use case doesn't always align with price action. I have no idea what that means. Okay, so I understand they only give you like 3 lines to come up with a question or a statement, but that one doesn't make any sense. Garson, they increase their dividends during the down times because it gives an incentive not to sell. All right, Gerson, fine, but if they're consistently increasing means they got to have money somewhere. Simone, now I am a little scared about Walgreens. Don't be. I have some really great news about Walgreens. Okay, so sit tight. Don't worry about it. William, thank you for your insight. Uh-oh, I missed some questions. Jeff, BlackRock is expensive but keeps going up. Is it too expensive to invest? Ooh, you got to give me the ticker symbol for BlackRock. So hold on a second. UGAR, United Laboratories, really? I missed some questions. I got to go backwards a little bit. Simone, here we go. Thanks for your insight. Love your content. Thank you. UGAR, United Laboratories. I'll write that one down, but I don't think that is a weekly. Apple Marathon Mon. AAPL. Damn it, went down the wrong way. All right, Gerson, I'm gonna take you on that one. They sell because they need money because they've stretched themselves out. That's a very high probability. But if you think of it this way, if you're putting your money into an American company as an investment, BLK, huh, Jeff? BLK. You already talked about dividend gathering. Brandon, dividend capturing. There's a difference. We're going to get to that in a minute. Remind me, don't forget, this man's a gem. Love watching you from Tennessee. I actually, funny thing about Tennessee, I actually have a timeshare in Tennessee. Okay, never been. I've been there once. That was it when I bought it. Never been there since. Wayfair is going to be no, George, because they don't have 20 years of increased dividends. All right, Darwin, we already have BlackRock written down. ECL. We'll take a look at that one also. Carlos Cesar, how big is it? Depends on what you're talking about. William, do you think there's more downturn this week to come and Friday's job numbers will be a bellwether? Well, here's the thing, William. I invest as if I was going to hold on for the long term. So if you're investing with the intention of holding on for the long term, then these little bumps in the road shouldn't really matter. Now, should they? Now, we're doing something totally different than the norm. The norm is to buy something and hold on to it for years and decades. But that's not what we're doing here. We're buying a stock and we're holding it for a couple of days, hoping to gather a 1% per week. You can invest dollar amounts. You don't need to buy a full share. Okay, Gerson, you're right. That's talking about fractional shares. Now, I know that Thinkorswim, which is in Charles Schwab, they don't do fractional shares. That way we can own BlackRock. I don't know. EX dividend date. Okay. Kohl's dividend next week. Okay. Fernando D. Hey, it's my brother. It's my brother's birthday. Could you give him a shout out? His name is Dixon Mayas. ¿Qué pasa, Dixon Mayas? ¿Cómo está, señor? Okay, what about Target? Ooh, I like Target. TGT. Or other expensive stocks. Okay, UL. Unilever. That's not United Laboratories? I figured it was United Laboratories. Either way, I've never done it before because I don't know who they are. Target MO. Okay, Michael, you want to take a look at Altria. MO. Swing trading. It depends on how you want to. William, not necessarily so, because we take dividend capturing and we couple it with covered calls. So dividend capturing and covered calls mixed together. I call it dividend capturing 2.0. Pepsi. When to buy Nvidia? Never. Ulysses? Never. Why? Nvidia's dividend is 1 cent. See, imagine 1 cent per share. That's what the dividend is. And they haven't increased it ever. The book value on Nvidia is $2 a share. So if they get brought to court and the judge says, nope, you got to liquidate, pay off all your investors. Guess what you're getting? You're getting $2 a share. That's all you're getting. Hell no to Nvidia. Seth, I haven't seen or heard from you in weeks. What's happening, dude? Question on LUV. Tomorrow is EX. Okay. Big Drew, how are you doing? LUV. He said, hey, Freddie, that's funny. You're just jealous because he took your place, I'm assuming. How's WA treating you? Wonderful. Homicycle stock. Never heard of it. Can you help with ED? I don't know who Ed is. Wells Fargo, huh, Darbenly? WFC. They trick you to shout out a birthday. Way to go there, Freddie. Brown Foreman. Encourage more viewers to share. Bama! I did Intel today, so I'm holding for a minimum, but got a good premium. Cool beans. I've heard that you can lose your 100 shares in a covered call contract if someone buys your. Not necessarily so. When you got to use the words properly. When you say lose, okay, that means I'm losing money. Okay, that's the first thing I think of. But when you say it in the context of which you're using it, I've heard you can lose your 100 shares in a covered call contract if someone buys your shares. Okay, yeah, well, that's the idea of it. So if I'm looking at AT&T right now at $20.50, I'm getting 15 cents per share for this week. Next week it's 25 cents per share. Okay, so hypothetically speaking, if it goes up to 24, 25, well, whoever bought that option is going to buy the shares. I'm not losing the shares, I'm selling them. That's the idea. To buy them at 20 bucks, sell them at 20 bucks, and still collect a premium. So, if I buy them at 20 bucks Monday, and then somebody buys them from me on Friday at 20 bucks, well, I get all my money back. And I also get to collect the premium. And the premium is what I'm looking for. What is a call? A call? Oh boy. New here. Gorgeousy. I don't even know how to spell. I don't even know how to pronounce that. New here. Gorgeousy. I have no idea. CLSK. All right. This is the third time you asked me for CLSK. I'm pretty sure it's going to be a no. Dude, can't you see your screen? Pity, right? Yes, I can. But you got to remember one thing. Okay, I got one screen here, one screen here, one screen there, one screen there, one screen there, and one screen down here. So don't think you're the only one at the party. There's a whole bunch of us here. And yeah, I got to go back and forth through all the different platforms. Seth, how could you possibly lose money on Walgreens? Okay? Here's the thing. If you buy, let's say you buy Walgreens at 30 bucks, and now it's at 10. If you sold it at 10, of course you lost. Still can't see the screen behind you. I can see the screen behind me. Okay? Contract, and they decided to exercise the contract. Well, Gerson, there's nothing wrong with that. Okay, so I just explained this a minute ago. If I buy AT&T at the current price, $12.44, I sell somebody the rights to buy it from me at $20.50. I collect the premium. Okay, the premium is what I'm looking for. If the stock goes up and they exercise and they buy it from me, well, I get all my money back. Doesn't make sense. Pity right, I have no idea why. This was created for a 9-year-old. If you can't get it, I really can't help you. It's simple, it's safe, it's predictable, it's consistent, and there's no way to lose if you do it right. Number 1, never buy something you don't understand. Number 2, never sell at a loss. Number 3, make sure the company is consistently profitable. Number 4, weekly options are a must because I want weekly cash flow. And rule number 5, make sure the numbers work. What are the numbers? Well, if I'm buying it tomorrow morning at $20.44, because that's the current price, $20.44, the 2050s are going for 25 cents a share. That's over 1%. So if it goes up, I have no... AMD. Advanced Micro Divisions is a no. They have no dividends. That's a no. Sorry, dude. All right, so where are we? What is a call? A call is an option. Casada Sciences, no dividends also. That's a no also. Okay, when I say 20 years of increased dividends, that means the company has to have dividends. The 2 you just gave me don't have dividends. They will not fit in this trading, this strategy. This don't work. So Seth, I'm sorry that you lost money on Walgreens. Okay, if you sold for less than you paid for it, that's on you. And I'm sorry, I don't like saying that. Okay, I like Walgreens. I have no problem with Walgreens. And I've made a lot of money off of Walgreens this year. And I still have it. Okay, Gerson, that's what he wants to happen. Start all over on Monday. Exactly. All right, where are we? All right, there you go. Futures are down and VIX above 20. Best stocks to buy right now. Hey, Pity Right, you're new here, dude. I can't really tell you what because I have no idea what you're looking for. Mara gives out rich premiums. Yes, it does. Futures are down, VIX above 20, buyers beware. Okay, I like it when the VIX is about 20. Okay, I see that's pretty good. Okay, thank you for clearing that up. You're welcome. Bimmer Redneck, thank you. We got it. Cut the man some slack. Thank you, William. A call is part of a trading option. Yeah, well, trading options. Pity Right, you're absolutely right. Blue chip stocks. They have survived the test of time. Okay, these are companies everybody's heard of. Okay, so why would you invest your money in something nobody's ever heard of, or you have no idea what the heck they do? Sir, what do you think of Bank of America? Well, I have a lot of different mixed emotions about Bank of America. A call is part of trading options. I didn't sell yet, but can't make good premium since current value is far from purchase price. All right, hold on a second. Could you tell me more about mutual funds? Yeah, stay away from them. Mutual funds are for people who have no desire to take care of their own money. If you don't want to take care of your own money, there's nothing wrong with that. There are people out there that are more than happy to take your money from you. Okay? I've never seen a mutual fund pay over 30%. Never. Hello, good evening, someone. How are you? Okay, thank you, James, for explaining it. You got it. Coke. I love Coca-Cola. KO, but Coca-Cola always has crappy premiums. Okay, at 73.10 at this moment in time, okay, the 73s are going for 46 cents, and next week they're going for 71. Okay, so next week you might be able to get 1% of it. US dollar basically worth nothing this coming year. Things don't make sense. Something has to give. TC, you're absolutely 100% correct. Warren Buffett, well, he's an interesting character. Is there anywhere I can view your full dividend calendar? Nope. Nobody does that. Made his fortune with Coke. No, he did not. But I do appreciate you chiming in. What's the good news about Walgreens? Well, I don't want to share the good news about Walgreens until Andrea is here. Okay, once Andrea shows up, I'm going to share her report that she made up for Walgreens, and it was very enlightening to me. I looked at it and said, "Holy shit, I didn't know all this stuff." Okay, TC, you're absolutely right. The U.S. dollar is basically worthless. So here's the thing: get as much money as you can and invest it into solid assets. What's a solid asset? Well, something's going to continue to pay you money. I'm not talking about Gucci. I'm not talking about Jimmy Choo's. I'm not talking about any of that expensive crap. No Lambos, no Teslas, nothing like that. A good quality asset, something that continues to put money in your pocket on a weekly, monthly, or annual basis. The Forex worth trading worth? Yeah, sorry, I don't do Forex either. I did it decades ago when I was a young man. I'm an old man. I hate saying that, but I am. I'm retired. I have no desire to go back to work. I have no desire to sit in front of a computer. So let's keep going. I got 2,500 shares of Walgreens. Hopefully the news you have is good news. Well, it depends on how you look at it. Okay? Now, I got Walgreens also, and I made money off of Walgreens this week. Thanks. You're leading people on the right path, James. Thank you, Gerson. Thank you very much. TC. So, hey, Andrea's here, so we can go to that report in 1 second. TC. So let's say the American dollar basically goes down to nothing. How would that affect the stock market? Well, TC, you really got to do some history. Okay, look at some history. The U.S. dollar that we currently have at this moment in time only came into play after World War II. What did you think? Hey, pretty right, cool. So what about banks? Some of them have plans. Blah 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 blah. Okay, cool. So here's the thing. If you take a good look at American history, the current dollar we have now didn't exist before World War II. So what did you think we used before World War II? Now the stock market's been around for 400 years, but it's only been here in the United States since 1778, I believe it was. 1778. What do you think they traded in 1778? So, if the dollar goes to zero, here's the thing. If you own a portion of Bank of America, IBM, AT&T, Ford, General Motors, well, yeah, the American dollar is going to disappear, but something else is going to replace it. And what do you think that's going to be? Who knows? I don't know if any of you guys ever heard of the Amero. Amero, that was the dollar that they were supposed to replace, I think it was a couple of decades ago. Do you remember when the euro came into play? Well, they also had the Amero, which they were trying to get rid of the American dollar decades ago. But it kind of fizzled out. But here's the thing. Even if the American dollar disappears, all right, and they get something else, let's call it Tootsie Roll. We're getting paid in Tootsie Rolls. Big deal. Every hour you exchange for your labor, your time, is going to be replaced with something. That's going to equate to a portion of a corporate stock. So if they get rid of the dollar, see, Coca-Cola is at 73 at the moment. Great. Let's say they replace it with Tootsie Rolls. Now you need 73 Tootsie Rolls in order to get a share of stock. It all depends on what they replace it with. But what's not going to change is the fact that you own your house, you own your car, you own whatever you own, and if you own shares in a company, pretty right. What about ETFs? Also can have a sneak peek at your portfolio. ETFs, I don't like ETFs. You're doing the exact same thing. You're giving your money to a computer to invest for you. We're going to get into some ETFs a little bit later on, so just hang tight and you will see what I'm talking about. ETFs are not as great as they want. I'm out walking. Oh, cool, Andrea. Intel reported some serious downsizing and may be selling its chip. Altris Andrea is here. Woo, alrighty then. Well, Andrea is here now. Now, she's the one who put the report together. I didn't want to put it up without giving her due credit because she's the one who came up with all the information. So let's go through a couple more questions, and then I'm going to bring up the report on Walgreens. So you guys who have Walgreens and a little antsy about it might feel a little bit better. I know when I saw it, I said, oh, this is cool. All right. Saturn. So you buy the stock option. No, I do not buy any stock options. a week out and sell it that week at a profit while getting dividends. Okay, you only paid attention, Saturn. You only paid attention to half of the equation. Okay, number one, I don't buy options. 80% of all options expire worthless. Can you tell me more about technical analysis? Oh boy. No. Candle chart analysis. That I can show you. We're gonna get to that in a minute. Where was I? Okay, so no, I don't buy options at all. 80% of all options expire worthless. So what do I want to do? Do I want to be a buyer? Hell no, I want to be a seller. If I sell options, well, 80% of the options that I sell, I'm going to have cash and not have to worry about it. Buyer? No, I don't want to be a buyer. Okay? Now, I buy the stock because it's two different trades here. Stock. Arij Fatima, how are you? Okay, there's two entities here. One is the stock, one is the stock option. Okay, so if I buy the stock, right now we're looking at Coca-Cola at 73. If I buy Coca-Cola at 73, right, I sell somebody the option to buy it from me for the exact price I paid for it. For that privilege, they are going to pay me a premium. And at this moment in time, that premium is 71 cents to 75 cents, or roughly 1% of the stock price. Now, do I care if the stock goes up? Nope, don't care. I care about is the consistency of increased dividends. How profitable are they? If they're a profitable company, I have no problem putting my money into it and holding on to it until it hits my target. What's my target? Well, this week my target is 73. Now, let's say hypothetically they hit my target at 73. Great, well, I get all my money back and I get that 1%. So now I have all my money plus an extra 1%. I do that every week, 1% every single week. That's my goal. I don't want to have to go back to work. So 20 years of increased dividends. Okay, there's about 300 companies that do that. And weekly options, because I want weekly cash flow. I use Thinkorswim and Robinhood. There are a bunch of trading platforms out there. You guys find what you like, but this is what I like. It has everything I'm looking for. So let's keep on going. But James is giving out some very good advice. There you go. Can you explain what I do with Walgreens right now? It's below 10, bought at 20. Well, Seth, hold on a second. Don't. Oh boy. Uh-oh. How you doing? Hey, Tyrese, how are ya? Average price. Charlo, what's the main incentive to dividend stocks offering weekly options to increase volume? You know what, Charlo? I honestly 100% don't know the answer to that question. I have no idea why they offer weekly options and not monthlies. I don't. Okay, they came up with options back in the 1970s as insurance policies to keep people from losing. Someone came up with a cool idea. Oh, what if I bought the stock and I sold somebody the option to buy it from me? Now you get cash flow. Okay, rest in peace, stock today. All right. Haha, if you're seeing this, check out Fried's talk on inflation. Okay. Unless they IRS digital currency, yeah, you're going to have a tough time with that one. Because here's the thing. Okay, when they came out with the Amero, was it 20 some odd years ago? There was a few countries, okay, amid the volatility, it seems like a good time to rotate into undervalued sectors. Okay. So when they came out with the euro a couple of decades ago, there were a few countries that said, no, thank you, we're keeping our current currency. Like energy, industrial, yeah, well, that's pretty much exactly what I'm trying to say. Can we use chat for this? Well, that's what we're doing. We're chatting right now. Options and puts are a fast game. Not necessarily so. Do you think about ARK? Nope. They hold a bunch of Tesla stocks. So, I don't like Tesla. Tesla doesn't have dividends. So when a stock goes up, great, fine, everybody's making money. When it goes down, what are you collecting? Nothing. Okay, that's why I like weekly options and consistent increased dividends. Let's get to ChatGPT. Yeah, no thanks. Oh boy, euro sliding against blah 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 blah. Okay. Trust wallet is confinable. Sam, how are you? Okay, Gator Loco? I have no idea what that means. Trust wallet is confiable? What does that mean? Ace, how's it going? Daniel, what dividend monthly stocks do you honestly recommend? Hey, Daniel, I don't recommend anything. Okay, I recommend everybody doing their own research. Why do you buy dividend stocks when your broker takes the money away on the EX dividend date? Well, that's an interesting statement there, Tommy. Now, hold on a second. Seeing the euro struggle against the dollar. Okay, pity right, you got to get me smaller sentences because they disappears before I can read it all. Tommy, now what you're talking about is kind of right, but kind of not right. I like dividend stocks because they keep increasing consistently. If the stock goes down, I'm still getting a dividend which increases every year. That's my reasoning to buy it. Also, my reasoning for buying dividend stocks is because stocks only move for two reasons, and only two reasons: a known reason and an unknown reason. Unknown reasons we can't do anything about. What else? Those natural disasters, lawsuits that come out of nowhere, okay, a failed new product launch. Those are unknown reasons. We do not know about those. But we do know about known reasons, something we know is going to happen. You have earnings reports, they affect the stock. You have dividends, they affect the stock. The euro's best week against the dollar lately. Okay, I don't do Forex, so please stop asking me about the euro and the dollar, okay? Where was I? Damn it. Oh, so dividend stocks, they have a tendency to increase in value before the EX date. Now, can you use earnings reports? Yes, you can. It is a known reason. What else are known reasons? Well, seasonality. What's seasonality? Winter, spring, summer, fall. Okay, certain stocks move based on the year, the time of year. Okay, cold weather, well, certain stocks do better in cold weather. Certain stocks do better in warm weather. Okay, Weight Watchers goes up in January. Well, go figure. Okay, Hershey's goes up in February, just before Easter and Valentine's Day. Certain things we know and certain things we don't know. I like dividend stocks because they're safe, they're predictable, and they're consistent. So these little green dots you see, those are the EX dates. That is when they're paying out their dividend. So if I like MDT, okay, I would buy it 2 weeks before the dividend date. The dividend date's the 27th. 2 weeks before is the week of the 8th, 9th, 10th, 11th, 12th, 13th, 14th. I will look to get my 1%. Okay, I will look to get my 1% for the week. If I get it, great. If I don't, well, I'll carry it into next week. I never buy something I do not want to hold long term. That's number one. Number two, I don't want to sell at a loss. Please, let's take a look at Rio. Hassan Pfeffer, haven't seen you a couple of days. We will put Rio down. We'll take a gander at it. Okay? Can we use ChatGPT to find stocks? Yes, you can. Good luck with that. I don't trust computers as far as I can throw them. Do you only buy options? I don't buy options at all. Okay. Perugado Games, can you be my mentor? Okay. Dividend gathering without options. Brandon Bitcoin. Dividend gathering without options. You mean dividend capturing. Brandon, I'm going to write it down, so I will go over dividend capturing before we finish the night. I'm writing it down, dividend capture. Okay, dividend capture is basically for people who don't have a lot of money and to get started. Okay, William, so you only buy options on dividends? No. Okay, I buy dividend stocks and I sell options. I do not buy options. That one is a monthly and it's a no. Alrighty. Wildcat Sam, how are ya? Old dog, holy cow, it's been a while. Hey James, did you roll coals today? I don't know, I think I did. I did roll Kohl's today. Intel oversold, don't know, we'll look at it. Now, I still want to get through these questions so we can take a look at Walgreens and the report that Andrea threw together. I think you guys will like that one. Yes, weekly morning crepe. Thanks, Redneck. Where we go? Haas and Pfeffer. School starts. School start is great influencer. Kohl's, yep. Tommy, thank you. You're welcome. Neil, did you tell us what you found with the research on Walmart? I didn't do any research on Walmart. That was Walgreens. Do you enter multiple trades or one at a time? All right, Tony the Tiger. Ooh, I have a bunch of trades going on at the same time. So you want to sell before or on EX date? Yes, Katie, I do. Thanks for the clarification. You're welcome. Andrea, anyone see Intel's announcement? That's a good idea. No. Sorry, Walgreens. Well, let's take a look at the Walgreens report. Okay? Andrea did a good report on that. What we're going to do, let's put up Walgreens first. WBA. Okay, so Walgreens had its high right here in December. A year ago, we're at 22. We dropped all the way down to 897. Wow, 897. All right, so here is it right here. Here we go. All right, Walgreens. Okay, this report was done by Andrea. Okay, Andrea, I bought it today, and it's it's down $2. Well, all right. According to Google search, 73% accurate. For more accurate comparative information, visit Walgreens company website. The sectors. All right. U.S. retail pharmacy sector. International sector. 3,600 stores with growing omni-channel. Sell everywhere your customer is and online presence. That's freaking cool. Joe. Okay. Number 7 Beauty. Okay, I never knew that Walgreens owned Number 7 Beauty. It's a makeup line, I'm assuming. Available in over 22,000 retail outlets and 29 worldwide markets. Cool. I didn't know Walgreens owned that. New specialty pharmacy business. Okay, new specialty pharmacy business. Alliance RX Walgreens. August 2104. The move that Walgreens believes will expand care for patients without complex conditions. Okay, cool. Okay. Walgreens started in the 1800s. It's 170 years old. 170 years old. Darbenly, J.P. Morgan. JPM. Okay. Okay, now I also didn't know this. Walgreens bought Rite Aid store for $5.1 billion in 2015. I didn't know Walgreens bought Rite Aid. Okay, what's Walgreens' 10-year plan? Walgreens has a new CEO. Walgreens may cut their dividend, a leaner, smaller footprint, will sell assets to reduce complexity and burning cash, which will give them $4 billion infusion in cash. Some reasons for Walgreens stock dropping. Well, reported cut profits, forecast fiscal 24. Okay, we knew that was coming. It's selling, downsizing, restructuring. CEO Tim Wentworth asked for patience while the drugstore giant executes its plan for the financial turnaround. Okay, a shift into the focus towards the primary care, post-acute care, and home care. Cool beans. Partnerships. Launches partnerships with Plethena and to compete with CVS and Walgreens to accelerate Alzheimer's treatment. Pearl Health built rewards saying blah 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 clinical trials reporting Kroger, Boehringer. I never even heard of Boehringer. Software, they own software too. Intercom Plus proprietary, partnering with Microsoft. Real estate own and will sell real estate. This is a very small amount of research on Walgreens. As with any company, plans don't always go accordingly. Some do. Restructuring and announcements of sell-offs and layoffs drop stocks, but that's what it takes to keep the company alive in an ever-changing market. So it's your choice. Do your research if you want to own part of the company via before purchasing the stock. Okay, see, I didn't know Walgreens bought Rite Aid. I thought Rite Aid just disappeared. JP Morgan, Darwin, I wrote down, why don't you just buy a XIT of VVR with 11% dividend that pays monthly? Thelma, you're new here. Okay, but just for the fun of it, Thelma, explain to me in a manner in which I will understand, because I didn't go to college, I have no problem admitting that, why you think 11% is better than 50%. Because at 11%, I would have to go back to work, and I have no desire to do that whatsoever. Rite Aid was closed recently. Do you think Walgreens got a good amount of cash from that? No idea. Okay, I think they went out of business. From what I'm reading here, Walgreens bought Rite Aid back in 2015. Okay, Walgreens bought out Rite Aid stores for $5.1 billion in 2015. Okay, Andrea did the research, so I thank Andrea for her research. Thank you very much. Thelma, I'm waiting for an answer. Why do you think 11% on either one of those companies that I've never heard of is better than 50%? Explain that to me in a manner which I'll understand. I think they're in business. Yep. Walgreens bought a large amount of Rite Aid stores, but not all. Okay, thank you for that, Andrea. William, like the Kohl's chart, however, you don't hold it long. Please explain your strategy on this. Okay, William, I'm going to get to that in a minute. Gerson, that would be some good money on their books for dividends. Yes, it would. Andrea, Walgreens bought a number of stores. Some were remaining. Okay. Hi, James. CVX. Kevin, Chevron. Gerson. Andrea. Oh, did they get their real estate? I don't know. Thelma. Oh, I just jumped on. How are you getting 50%? Just counting on stock appreciation or options. Thelma, I do covered calls and dividend capturing coupled together. I call it dividend capturing 2.0. Okay, and I average over 1% per week safely, consistently, predictably. Okay, 1% a week, that's what I'm looking for. So, Thelma, if you want to sit back, relax, ask as many questions as you want, okay? And then if you understand it, great. If you don't, hey, more power to you. But 11% per year, no, that doesn't work for me. I have no desire whatsoever to go back to work. I don't. Okay? Bob is here. How are you doing today, Bob? All right. Again, thank you, Andrea, for that report. It worked out very nicely. And there's some information on there I didn't know. Okay? So, I have Walgreens. Now, I own Walgreens at 12. Well, WBA. Okay. All right, so I forgot who it was who asked me about Walgreens. Okay, now I'm going to zoom into Walgreens. A lot closer, a lot closer, a lot closer. Here we go. So here's Walgreens dropping. Okay, so I have Walgreens at 12. Okay, so I bought it at 12. Back in the beginning of August. Okay, now we're at the beginning of September. But look what option I sold against it. I sold a $9.50 call option at 6 cents a share. Not quite, that's a 0.5%. Okay, so a 0.5% per week. Okay, 0.5% per week is over 24% per year. But I like to get more than that. But it is what it is. It's down at 3 cents now. I could roll it and go for the 9s if I wanted to. Let's see what a 9 looks like. Okay, so let's roll it, see what a 9 looks like. Go, check that out. I could roll it again and pick up another 25 cents per share by selling the 9s. Well, it's at $8.97 now. If it continue to go down, the 9s will give me another 25 cents per share, and that's over 1%. All right, so let's do that. All right, so I'm going to sell, roll forward. I'm going to buy the 13 September. Right, I'm selling the 13 September. I'm buying back the 6th. Okay, that's not bad. I like that trade. If you're selling the option is getting 1%, you're making more with the dividend payout. Brandon, I don't go for the dividend payout. All right, because as soon as, let's pull this up again. Okay, now remember I told you each one of these little green dots represents a dividend date. So if I want to collect the dividend, I have to buy it before this date. Here's MDT on the 27th. So if I want to collect this dividend on MDT, which is 70 cents per share, right here, 70 cents per share, if I want to collect that, I have to buy the stock the 26th, the 25th, the 18th, the 10th, the 4th, the 12th, any time before the EX date. Now, remember, as soon as you pay, the dividend pays out on the 27th, the stock has a tendency to go down. So why would I want to hold it into that week? Hey, I'm all caught up. No, I didn't know. Say dividends on your profile. Says dividends on your profile. Yeah, dividend investing for cash flow. Okay, dividend investing for cash flow. So I'm looking at the dividends. I'm buying the stock, collecting the premium by selling a covered call against the position. Thoughts on ICT? ICT is going to be a no. I know that right off the top of my head. You ready? Here we go. ICT. Oh, look at that. It's a no. I'm shorting a stock and making money. Should I keep shorting? I honestly couldn't tell you. I don't short stocks. I do one trading strategy here and only one. The reason for that, in 2008, okay, my daughter wanted to learn how to do some trading because I was trading and she wanted to learn to do the same. You know, some father-daughter bonding time. Cool. ICT's a person, my B. Okay. So, do you always sell on the EX dividend date, or does it have to be a day after? William, you weren't paying attention, William. Sit tight for a second, okay? All right. Where was I? I forget where I was. Oh, so I don't know who it was. There's no name on there. I'm shorting the stock, making money. Should I keep shorting? I can't answer that question for you because I know absolutely nothing about you. Sorry. I can't give you I can't. Now, some people I can answer questions for because I actually had conversations with them, and I know what they're looking for. Yo, Johnny. So, do you always okay? Yo, Johnny, how are you making money on WBA if your strike price is 950 is less on your 12? Oh, so yo, Johnny, you weren't paying attention either. Okay, so here's the thing. If I buy the stock, let's go back to WBA. WBA. All right. You ready? Aaron, how are ya? All right, Johnny, you ready for this? This is for you too, William. You ready? Okay. Here's the chart. Here's your high. Here's your low. Here's where it was. Here's where it is. This is the direction it's going. Currently, it is at $8.98. There's no really arguing about it because it is what it is. Here's the last traded price. Here's the bid. Here's the ask. Here's how much shares were traded today. Here's the open. Here's the high. Here's the low. And there's the close. Open, high, low, close. Those are all the numbers when we're associating with a stock. Okay, great. So the stock is down today. It's at $8.98. Lovely. I bought it at 12. Okay, so I bought it at 12. So I own, how many do I own? Walgreens. I have 1,600 shares. Okay, so I have 1,600 shares of Walgreens. All right, now, if I own 1,600 shares, I have the right to do whatever I want with those shares. So what I am doing is I am selling somebody the right to buy them from me at $9.50. $9. Okay? I am collecting 17 cents a share. 17 cents a share on an $8 stock. Well, I got it at 12, so let's do this. All right, clear that. I'm collecting 17 cents a share. Okay? So I already own the stock. We have established I already own the stock at $12. Okay? I bought it at 12. It's still mine at 12. I am selling the right, not the obligation, for someone to buy it from me. Anytime between this morning, when I sold the option, and Friday afternoon, when the option expires. So, if the stock continues to go down, I will continue to own my shares next week. Okay? I only lose if the stock goes up and whoever bought that option exercises that option. However, as the stock is going down, I am selling the 9s at 17 cents. Okay, 17 cents on the calculator. Now, I divide that by my purchase price. Well, now we already know that I purchased it at $12. Okay, that gives me a grand total of 1.4% for the week. Not 1%, 1.4% for the week. So, I look at the stock twice a day. Once in the morning with my morning trading group. We have a bunch of people get together and we actually trade first thing in the morning. Our goal is 1% per week, safely, predictably, and consistently. Okay? That's our goal. So if the stock is dropping, I can sell it for 9, I can sell it for 9.50, I can sell it for 10, I can sell it for 10.50. I own it, I can do what I want with it. Now the risk comes in if the stock goes the other direction and starts to go up. Where's that chart? Okay? Here's our high right here. Here's our bottom here. Now, we haven't come to a bottom yet. It's still going down. So, if she continues to go down, which she very well could be, but there's 8,700 stores and they own a lot of stuff. I don't see them going out of business anytime soon. Okay? They've been in business for over 170 years. All right. So that being said, the 17 cents per share that I am collecting is 1.4% rate of return for the week. So first thing in the morning, I watch what the stock does. Late at night, right now, I get to see what it did for the day. Okay, it allows me to go in first thing tomorrow morning. Well, what do? Do I buy it back? Do I sell it? That's the risks I am taking. There's a chance that if the stock turns around and goes back up, well, I'm going to have to buy that $9 option back because I sold it. 80% of all options expire worthless. That's what I'm betting on. That the stock is going to either stay the same or go down a little bit more. And that profit I get to keep, and I get to do it again next week. Okay? Does that make sense, Johnny? Aaron, how ya? John, wow, you were talking. Uh-oh. I missed some questions. You were talking about your daughter. Oh, yeah. When my daughter was 9 years old, she wanted to learn how to trade. So, I had to make a trading strategy specifically for her. Number one, it had to be simple. It had to be safe. It had to be predictable. It had to be consistent, and no way that she could lose. That fifth one always gets everybody. What do you mean, no way she can lose? Well, other than short of the world, the earth opening up and swallowing the company, yeah. Walgreens, 8,700 stores, I can't see them all going under at the same time. Sorry, can't see it. Okay, they could file bankruptcy, but hey, that's a chance we all take. Okay? Now, for her, those 5, okay, simple, safe, predictable, consistent, no way to lose, blah, 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 I had to come up with 5 rules in order to make sure she didn't lose and her profits were consistent. Rule number 1 was never buy something you do not know or you do not understand. My daughter completely understands Walgreens. Okay? She walks in the store, she buys her stuff, she walks out. That's as far as she needs to know. There's a Walgreens in every major city in the United States. There's even some of them around the world. Okay, great. Now, rule number 2, never sell at a loss. It kind of defeats the purpose. Rule number 3, make sure the company is consistently profitable. Well, we have an issue with Walgreens at the moment, but you heard what the plans were. The new CEO coming in, making all these changes. Good. Well, let's see what happens. Rule number 3, make sure the company has, wait a minute. Oh, sorry, rule number 2, never sell a loss. Rule number 3, make sure they're consistently profitable. Me, personally, I like 20 years of increased dividends. Rule number 4, make sure there are weekly options. When I say I want weekly cash flow, if it doesn't have weekly options, I want nothing to do with it. Now there's 9,600 different companies that I can choose from any single day. I like only about 300. 300 companies have increased their dividends for more than 20 consecutive years, and they have weekly options. Okay? Those 2 criteria, just those 2, consistent increase in dividends and weekly options, then I take it and put it into the calendar. Why do I put it into the calendar? Well, because I want to know when the stock is going to move. Because the stocks have a tendency to increase just before the dividend is paid. So if I'm looking at MDT, I know it's going to go up in value just before this date. Okay, so great. When is a good time to jump in? Do I want to jump in 3 days before? 5 days before? 10 days before? 15? 12? How many days ahead of the dividend do I want to look at? Well, after doing this for about 15 years, I've come to a conclusion it's about 10 years. 10 days on a Monday. So here's the dividend right here. 10 days before that would be the 13th, but I want to do it on a Monday. Okay, so I buy it on a Monday, I buy it at the market price, and I sell a covered call at the market price, because that's the highest value you're going to have for your rate of return, is at the market value. So let's go back to here. Okay, so Walgreens at this moment in time is $8.98. So we're looking at the $9 strike price. So if I buy it at $8.98 and I sell the 9s, well, I'm getting 17 cents a share. That's a tiny bit below 2%. But I already own it at 12, so I'm only making 1.4%. So if you, anyone, wanted to buy it tomorrow morning at $9.89, sell off the 9s, you can get close to 2% for the week if you like Walgreens. Remember rule number 1, never buy something you do not understand. Always go into every transaction as if you're going to buy it and hold on to it for a very long time. That's what I do. I go in, I bought it at 12, I have no intention on selling it for less than 12. Okay, if the stock turns around and goes up, well, I'll buy that option back. Okay, I will lose a little bit of money on the premium if I have to, but I won't lose money on the stock because it defeats the purpose. And it's always, always, always about the numbers. So when Friday comes around, we will know what the stock price is at, we will know what the value of the dividend, the premium is, and we'll also know what the value of the options are for next week, the week after, and the week after, because they're always listed. All right, Tony Stock Pro Trader, cool. Aaron, doing good. I have my eyes on the stock and feel super good about it. Cool. How do you know when to buy a stock? Well, still no name. How do I know when to buy a stock? What's today's date? There's your answer. What's today's date? Well, today's the 3rd. The 3rd is right here. If I want to buy stocks 2 weeks before the EX date, okay, 1, 2, any stock here, okay, AIG, MO, BBY, and there's a bunch more. I think we looked at 15, maybe 15 to 20 stocks this morning. Okay, I bought a few. Okay, now I don't buy a whole bunch at once. I'll buy 2 or 3, 4 stocks a week. That's it. As long as I can make my 1% per week, that's all I care about. That's just my opinion. Samson, Kohl's for continuation. Kohl's, I believe, is on the list. Well, it's on the list now. Kohl's, I know this doesn't have dividends, but it looks pretty good for profit. Aaron, I appreciate your contribution, I do, but if it doesn't have dividends, why am I looking at it? Okay, now think about this for a second. I get 300 companies that I take a look at and I follow on a continuous basis. You're asking me to look at 301 that doesn't fit into the program. So if it doesn't fit into the program, why am I looking at it? If it goes down, what am I collecting? You know? Penny, no. However, You still lose roughly $3 a share if they exercise. But William, you're missing something very important here, William. Okay? Now, they have what's called a one-day settlement. It used to be a two-day settlement, but now they have a one-day settlement. Okay? Usually, currently here, it's at $8.97. So you're right, it's about $3. However, if I look at it tomorrow morning, right, and I have what's called an alert, okay, if this thing gets $9.15, well, send me a text alert. Well, I get a text alert. Now it's up to me to go in and save that $3 that you're talking about. How much is it going to cost me? Well, I won't know that until the situation occurs. But at this moment in time, she's going down. Until she stops, well, I'm going to continue pursuing it to the downside. So, William, I won't lose until I sell it at a loss. I have no intention of selling at a loss. Samson, Bama, I thank you kindly for that mention yesterday. Cool beans. Matthew, how are you today? Bama Redneck, I'm up 90% on it already. Cool beans. Uh-oh. Uh-oh. Where am I? I keep messing this up. Okay. Sir, what's your take on Con Edison? I like Consolidated Edison. Now, not many people know that Consolidated Edison has been in business for over 200 years, and they consistently increase their dividends. Unfortunately, they're a monthly optional stock, and I don't trade them. You can buy and hold. It's a valid strategy. It is a valid strategy. Yep, that's what I think I'm going to do. All right. Sir, what's your take on Con Edison? We just answered that question. It's great. Several strategies to make money. There's a whole bunch of strategies to make money. This is just the simplest, easiest, and safest. Is Walgreens swallowing up by CCS? I have no idea what that means. CVS. So, the 1.4% rate of return is just from the dividend. John, you weren't paying attention. The 1.4% is from the premium, not the dividend. Okay? Check it again. Currently, the price is at $8.98. That's the current stock price. If I bought it tomorrow morning at $8.98 and I sold the $9 strike price, that is called a covered call. One of the safest trading strategies there is, a covered call. I buy the stock, I sell the option. I collect the premium. The premium is 1.4%. That's where I'm getting the 1.4% in that situation. Darbenly Visa. We'll take a gander at it. Let's keep going. What do you recommend to learn swing trade? I don't swing trade, Jose. Walgreens definitely has stores in different countries. Yes, they do. Kohl's, we're going to take a look at Kohl's in a little bit. Andrea, Walgreens bought Dwayne Reed as well. Oh, I didn't know that one. I don't even know who Dwayne Reed is. Just find a good mentor, but this is safer and better, but we all have options. Redneck, thank you for that, Andrea. I really didn't know that. I didn't know that either. Andrea, this is one. Is there one? Okay. Andrea, Walgreens will make so much money from either not paying or releasing all those stores they're selling. Yeah, you got it's a good question. I mean, that was a good response. All right, Brian, we are going to take a look at Kohl's in a little bit. Let me finish going through these questions first. Sir, what's your take on Con Edison? This is like the third time I've said Con Edison's been in business for over 200 years, and they consistently increase their dividends, but their monthly optional stock, I don't trade them. Kohl's should be in 21 next week, and ex-dividend on September 11th. Cool. We're going to take a look at Kohl's. It's on the list. MPW, Brian, MPW is on the list, I believe. Well, it's on the list now. MPW. I bought a bunch of MPW this morning. Mahesh, how are you today? Do you ever buy when the EX date is just a week out and there's nothing interesting 2 weeks out? Yes, I do, Andrew. It's always, always, always about the numbers. What am I buying it for? What am I selling the covered call for? What premium am I collecting? And what is the chart telling me? Very, very important. What is the chart telling me? Well, the chart telling me on Walgreens is don't do anything until it finds the bottom. Okay, but I already own it. I have no choice in the matter. Brandon, if you buy 10 days before the dividend, but then sell the option to make your 1% first week, why does the dividend matter? Ha ha ha. I get that question a lot. Where was it? Where was it? Uh-oh. Uh-oh. I hit too many buttons. All right, there we go, Brandon. If you buy 10 days before the dividend, but sell the option to make the 1% first week, why does the dividend matter? All right, Brendan, here's why the dividend matters. Number one, the dividend is a portion of the company's profits that they give back to the investors. Okay, so you have companies that take all the profits and put it back into the company for capital growth. Okay? The other companies take the dividends and put it into paying off the investors. Okay, so I get a portion of the company's profits. Now, if the company is continuously profitable, that means every year they increase their dividends every single year. Well, that means they're profitable year after year after year after year. Okay? However, 10 days before the EX date on a dividend stock, the stock has a tendency to go up. So if I didn't care about the dividends, well, this stock wouldn't be on the list. Well, then how would I know what stock is going to move and when? And absolute worst case scenario, if the stock drops to the floor and they still continuously increase dividends, well, that's kind of a good thing, isn't it? Okay, I use the dividend as a precursor to tell me when to buy the stock. And again, remember, if I like MDT, okay, if I like it and I want to buy it, okay, I will buy it on a Monday. I will sell the covered call. I will make 1%. Okay, so I made 1%. If it hits my target, great. I will go on to something else the next week. But if it doesn't hit my target, well, I collect the 1% here. And then on Monday, well, I'll do it again. And I'll collect another 1%, hopefully. If I hit my target, great. If I don't hit my target, I will do it again a third time. And I'll collect another 1%, and I will collect the dividend. So 1%, 1%, 1% dividend, and I'll do it again, and I'll do it again, and I'll do it again until it hits my target. So if I get 1% every single week, and there's 52 weeks in a year, well, that's over 50% per year. That's why dividends matter to me. An absolute worst case scenario, if the stock drops to the floor, well, they're continuously increasing their dividends anyway. Because if they've increased their dividends for 20 consecutive years, well, more than likely they're going to do it for 21, 22, 23. Not always the case, but usually. If I can stack the odds and probabilities in my favor, why not? That's just my take. Okay, now, I could be 100% wrong, but I've been doing this for 15 years, and I'm successfully getting 1% per week, average. So I don't make 1% every week. Okay, there was a couple of weeks where I made, hold on a second, let's take a look, because I actually have all my trades available for you to see online. Okay, I don't need this one anymore, so get rid of that one. Okay. All right, let's go all the way back to week number 1. Now, every single one of my trades is available online, so you can see them all. I shared 3 accounts. Okay, the beginning of the year, I only shared 2, but then I picked up another account a couple of months ago. All right, so here's my example. Week 1, first quarter. You click on this, it will open up, and it'll tell you all the trades right there. Okay, January 2nd, 10:01 a.m., Macy's, General Motors, Ford, CVS. Well, week 1, I made 2.12%. That's nice. Week number 2, Macy's, Ford, General Motors, Clorox, Lowe's, and Ford. Well, week number 2, I made 1.3%. Okay. Here you go, week number 4. Clorox, General Motors, Capital One Finance, Ford, Macy's. Week number 3, I only made 0.85. That's not 1%. 0.85. Okay. Week 4, 0.9%. Again, not 1. Okay. Week 5, 1.03. 1.06, 1.9, 2.03, 2.32, blah, 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 all the way up to currently where we are now. So I average about 1% per week every single week. Random New York City. Thank you. You're welcome. Random New York City. Sir, what's your take on Con Edison? We did that a bunch of times already. All right, we already talked why dividends matter. Mesh. Is it okay to buy and sell calls in 5 days or less, especially on short weeks as this? Okay, Mesh, I don't buy calls. Seriously, I don't. I sell them. Okay, because 80% of all options expire worthless. So why would I want to buy them if I have an 4 to 1? Yeah, 80% is 4 to 1. Okay, so it's a 4 to 1. Okay, so I'm saying, sorry, I don't recall. Alrighty. So, yeah, I sell calls. I do not buy them. And, yeah, well, what are our options? Okay, it's a 4-day work week. It's a 4-day week. Do I just not trade? Okay, no, I trade every single week. All right, Walgreens is giant, CVS is small. Yep. Thanks, man. Just full ported. I have no idea what that means. CTAS, Eric, CTAS. I'll write that one on. CTAS. Andrew Smith, sir, can we look at Ecolab? I don't know why you want to take a look at Ecolab. Ecolab. ECL. 247. All right, who wanted to look at Ecolab? Kenny Smith, how are you today? No. Ecolab is a no. It's a monthly optional stock. Monthly optional stocks, the numbers just don't work. Okay? 2 reasons I don't like monthlies. Number 1, numbers don't work. Okay, what do I mean by that? Right now it's at 247. The 247, well, closest one I got is the 250. Okay? I got 240 or 250. The closest one is the 250. It's $2.50, which is only 1%. Now I got to take that 1% and divide it by 3 weeks. So I'm getting 1/3 of a percent per week, or less than 1% per month. Why would I do that? 1% a month is only 12% a year. Now some of you people used to getting 3, 4, 5% a year. Maybe you not like 1% a month, 1% a month, which is 12% a year. But it's worse than that. Okay, here we are right now at the moment. Okay, yesterday was the high. Today it was down a little bit. Great. Now tell me, where's it going to be in 3 weeks? It's hard enough for me to figure out where it's going to be in 5 days, Monday to Friday. Now I got to figure out where's it going to be 3 weeks from today. Let's look at here. 3 weeks ago we were here. Okay, so it was at 230 3 weeks ago. Now it's at 247. So do you really think in another 3 weeks it will continue to go up? I don't. Because from 230 to 247, that's a $17 increase. That's a nice little profit. People like me are going to grab that profit and run. Say thank you very much. So no, I don't do monthlies. They just don't pay. And trying to figure out where it's going to be in 3 or 4 weeks, yeah, no thanks. And what's worse is if I don't hit my target, I've got to carry it for another 4 weeks. Because look where the next one is. Okay, this one is 17 days, which is 3 weeks away. Then it's 45 days after that. Okay, that's 7 weeks away. Yeah, no thank you. Monthlies just don't work. The numbers don't work. No thanks. All right, Samson, CVS, Rite Aid, and seems like Walgreens has them overpowered and encroaching. Well, alrighty. Michelle Boudreau, how are you doing tonight? Nice of you to stop in. Nice to see you. All right, let's keep on going. To trade with. Okay. Uh-oh, I missed some questions. All right. I bought SoFi around $5 a share. Should I hold long term? SoFi. SOFI. I haven't picked on SoFi in a while. Let's pick on SoFi. Why the hell not? Okay, so SoFi is at $7.50 at this current moment in time. All right. A year ago, well, let's do it like we do the other ones. Here's your high, here's your low, here's where it was, here's where it is, here's the direction it's going. Currently at 751, the 750s are going for 17 cents a share. That's over 2.5% for the rest of, for 3 more days. Okay, but wait a second. Let's look at the last 30 days. Okay, here's the last 30 days. 30 days ago at 760, drops down to 6, and then shoots on up to 820. Now she's back at 750. Well, she's in a downturn now, so SoFi is going to be a no. But here's the thing. You say you bought it at $5 a share. Now it's at $7.50 a share. That's a 50% increase. So I can't tell you to sell it. I can't tell you to keep it. I know nothing about you, but I do know one thing. Well, number one, it ain't a profit until you take it. Okay? Nobody ever went broke taking profits. Now, if you bought it at 5, okay, now it's at 750. You're up 50%. Cool. Let's say hypothetically you sell it, you grab that profit, and then you wait 2 weeks for it to drop down to 6, and then you buy it again. And then when she turns around and goes from 6 back up to 7 or 8, well, then you sell it again. Buy, sell, or hold on to it. I can't tell you what to do, seriously. But wait, I'm not done with SoFi yet. So let's go to SoFi and look at Yahoo Finance, put in SoFi, and find out exactly how crappy this company actually is. Look, number one, they have no dividends at all. Well, how do I know if they're profitable? Now I'm stuck researching all that damn annual reports just to see if this company is profitable and for how long. Summary. It doesn't even give me a yield, so I can't tell whether or not they're profitable and what they're giving me. They have no dividends, so what options do I have? Okay. All right, so let's go to the next one. Sorry, I just don't like SoFi. Okay, they have no dividends. It's hard to tell if they're profitable or not. You bought it at 5, great. It ain't a profit until you take it. Whether or not you take the profit, that's totally up to you. Hey, random New York City. I'm so broke due to my circumstances, I'm not sure how I can ever start. Well, you start small and you work your way up. Okay? How do you eat an elephant? One bite at a time. A journey of 1,000 miles starts with a single footstep. I don't know what you want me to tell you, but you are where you are because that's where you want to be. The reason why I say that, if you don't like it, then do whatever you have to do to get out of it. That's it. What's happening to Walgreens? Total shares number since early August. Okay, Charlo, I don't know. My research only went so far. So it actually compounds. Well, it depends. Darbenley, KFCKF. Yeah, hell no. Samson, even if you cash out and reinvest it, compounds, correct? Redneck, you can be real conservative and do an $8 strike and get a 2% premium for the 13th. You're absolutely right. You need to find a side hustle where you live. Where do you live? Okay, that's a good question. Okay, great job. 90 minutes. Holy cow, it's been 90 minutes already? We are at 9:45. Yay for us. All right, Samson, if you make 1%, you take that cash the next week and invest. You can do whatever you want. Hey, James, I left you a question in your messages because it was too long to ask here. Well, I'll take a look at it and I will answer you later on. Options help with existing shares. I missed that question. Options, all right, Charlo. Options help with existing shares, just changing hands with no added shares to total. Okay, I'm not quite sure what you mean by that. I meant buying shares and then sell covered calls. You're absolutely right. I do that every week. I'm not quite sure, Mesh, what you're talking about, but okay. Samson, $100,000 to 101, to 102, to 103. Yep, I get it. That's exactly how it works, one at a time. AGNC, isn't that a monthly? I don't think so. Let's take a quick look at AGNC because it's on the list. AGNC. Nope, it's not a monthly. It is on the list. No interest in daily options. All right, Richard, yeah. Sorry, I don't think there's enough companies out there doing dailies, and then I'd have to sit in front of the computer. And I told you guys over and over again, I don't like sitting in front of my computer staring at charts all the time. I used to day trade decades ago. I don't do it anymore. I did Forex decades ago. Never did cryptocurrency because at this moment in time, it's just a fad. You really can't use it here in the United States as of yet. Okay, so once it is available to buy my coffee, to buy my groceries, put gas in my car, until then, I'm just going to watch it. All right. Is it good chance to buy Estee Lauder now? I bought Estee Lauder months ago and I still have it. And I'm down 15% on Estee Lauder. Yep, I keep collecting the dividends. And to be 100% honest with you guys, I don't have enough shares in Estee Lauder, because it's in my grandson's account, to do anything with it other than wait for it to go up. All right, Novacure. Never heard of it. It's going to be a no. Sorry, Pig Slob. Where the hell did you get a name like that? Wangle. I like that one. Wangle, 1976. I like 1976. That was a good year. Rocky came out. I think Star Wars came out. And I think Jaws came out in 76. Okay, and it was the bicentennial. I met my best friend at the Memorial Day parade. He was wearing a denim jacket with an owl embroidered on the back. Interesting. I got a very good memory. I'm worried about Walgreens. We'll never go above 9 again. Jerry, you know, you're not the only one that's in that situation. Okay, a lot of us feel that way. How do you know if they are profitable from dividends? Wang, 76. Okay, here's an idea. Now, I'm not quite sure how. Let me just simplify it. Okay? Now, if a company is profitable, they get two options. They can take the profits, put it back into the company. That's for capital appreciation. Stocks go up faster with those kind of companies. Or they can take the profits and give them to the investors. Okay, we are the investors. We buy and we sell. We are investors. We get dividends as our share of the company's profits. If the company's profits increase every single year, year after year after year, well, they're going to increase their dividends to their shareholders. So if the dividends continuously go up, it's kind of a shortcut way of saying, well, they must be continuously profitable. Thank you, sir. You're welcome. Missing some. All right. Henry wants to take a look at Dell. I write Dell down. Isn't Dell written down already? No, it's not. All right. Well, Dell's written down now. All right. We'll take a look at Dell in a little bit. Me personally, I'd sell and then do a put option for 2% lower than the current price. Cool beans. That is an excellent option. But remember this. When I created this trading strategy for my 9-year-old daughter, it had to be simple. And so many people, don't get me wrong, you are correct. It's a great idea. It's a great strategy. But if I did that, I would have to change my trading strategy. And it's been the same for the last 15 years. I've helped hundreds and hundreds of people stair step from this trading strategy to something else. Because granted, this one is simple, it's easy, it's not that difficult once you understand it. Okay? But you're right, a put option would give you a might be a safer bet. But I wouldn't do a put option in a downtrend. Okay? Because Walgreens was going down. I would not do a put option. I would sell the call because I already own the stocks. All right? It's always a trading strategy that can make money. There's so many strategies, but I only teach one here. This is what's called a stair step strategy. It allows you to put your foot in the door. Okay, buy a good quality stock, sell a covered call against it. It's the safest strategy there is. Okay, put strategies are not as safe. I do have a side hustle. I do find jobs in Field Nation. Cool. Okay, so random New York City, dude. Seriously. Now, I'm going to tell you something that somebody told me once, a long time ago. It may be helpful, it may not. You're going to work from the time you get out of high school, probably till the day you retire or the day you die, whichever comes first. Okay? Out of all the people you owe money to and all the people you pay, who do you think the number one person is, the most valuable person in your life? See, you work all these hours, you do all these jobs. Who is the number one valuable person in your life? Well, I'm going to save you the trouble from looking. It's you. You should always pay yourself first, then pay your bills, then do your investing. Or invest first, then pay your bills. I don't know, however you want to do it. But always, always, always pay yourself first. Okay? Pablo, do you use Trade Wall Street? No, I don't. I've always aspired to be a trader in New York. Cool beans. I'm a redneck. I just need help with investing with a very minimal amount that I can afford. Well, you're absolutely right. And that's, we are going to do dividend capturing in a little bit. A dividend capturing is a simple, easy trading strategy. What do I think about Jumia? Never heard of them. Okay. Are you from New York? I hold full-time job and work part, but like I said, due to, okay, yeah, I get it. Prospect Capital Finance, PSEC. PSEC. I don't like that company. PSEC. Right again, PSEC. Okay, PSEC is a monthly. Okay, monthly optional stocks just don't work for this trading strategy. I don't like them. They're just it's just not enough money in them, in my opinion. I have been away riding in a robo-car. How are you? Hey, Dina. How are you, Dane? How are you doing? I haven't heard from you in a couple of weeks. All right, Jerry Beard, just keep doing covered calls and track your money. I couldn't give a better advice if I tried. Thanks, redneck. Due to circumstances, I am broke. Okay. First of all, random New York dude, you got to change your mentality, change your thinking. Uh-oh. Where am I? Uh-oh. All right, Jumia. I've never heard of Jumia, and I don't know why you want to look at it. Jumia. Oh, look at that. JM. Okay, here we are. $4.47. What was it? JMIA. JMIA. Alright, so you asked me 3 times to take a look at Jumia. Here it is. There are no dividends. It's time selection. That means it's a no. Simple. Got it? Jumia is a no. So do you think Walgreens will ever get above 9 again? I 100% don't really know. Sorry, it is what it is. I own 1,800 shares of it, and I'm just waiting for it to do the same as you. But I'm writing covered calls every single week against them. I'm doing just bought more today. Right, Random City. I live in Arkansas. Cost of living much better. Yep. Okay, alright, and we keep going. Yes, cost of living is definitely cheaper. Where are you? I'm just so lost with it. Alright, now, random dude in New York. There's a lot of ways you can get out of the situation you're in. But mainly, I don't know what the hell you're in New York for in the first place. Seriously, I don't. But I can't tell you one way or another, because I don't know anything about you and I don't know your situation. But that being said, always pay yourself first, one little bit at a time. It all adds up in the long run. Comes down to options and etc. Well, yep, it does. Jumia is a no. That's the 4th time you asked of it. That's the 5th time you asked. And still, Jumia is a no. Please, don't ask again. Sir, I'm an old man. Oh, are you? Big Bear AI. If you're an old man, what the hell are you doing in New York? Unless your kids and relatives live there. I understand that. Good question, William. Do you need a brokerage account with specific allowances to place covered calls? Yes, you do. Now, you got to be 18 years old to open up a trading account. Okay, after you open the trading account, you have to get approved for option trading. Now, option trading is very risky. However, the covered call is not risky at all, but you still have to get approval for it. You call your broker or send them an email. Say, I would like to do covered calls only. And then they will send you whatever information you need to fill out. It's really not that difficult, just to let you explain to you that investing is risky. You got to read that little book, The Characteristics of Option Trading. Characteristics and Risks of Option Trading. I think that's the name of it. Characteristics and Risks of Option Trading. I don't know. It's that book. You got to read it. And then it's really not that difficult. It means you buying something. Most options expire, worthless. 80% expire, worthless. They need you to know certain things before you're allowed to do it. But covered calls is one of the safest trading strategies it is. All right, dollar cost averaging down. Yep. All right, Bama Redneck, Jerry Beard. If Walgreens goes bankrupt, they get liquidated, and they were worth around 15 to 20. Okay. William, do you need a brokerage account? Yep, you do. Already did that one. Dollar cost average. What's next trade after when? WEN. Did we even do when? We didn't even do when. WEN. Wendy's. Yeah. Wendy's is no. When I say I don't like monthly options, Wendy's is a monthly optional stock. That's a no. The people on Yahoo Finance said I'm a clown. Alrighty then. I don't know why they would say that. That's not nice. Jerry Beard, you can sell the 9 and make $17 per contract. If price goes up, you roll up and out. Well, yeah, that's what you do. You're right, Redneck. Thank you for that. What do you think about health tech stocks? All right, Jim, I'm going to tell you the same thing everyone else asked me about sectors. I honestly I don't know how to explain it. I really don't care. I don't. Let's take a quick look. Bank of America, General Motors, Kimberly-Clark, and Pepsi, all paying their dividends on the 6th of September. That is this Friday. What do those four have in common? Absolutely nothing. Okay? Bank of America, banking. General Motors, auto. They make cars. Pepsi, well, they make Pepsi-Cola. And Kimberly-Clark, I really don't know what they do, but I know they've been around for a while. They have 4 different companies, 4 different industries, 4 different sectors, have nothing in common. I really don't isolate my stocks from healthcare, tech stocks, transportation stocks, money stocks. I don't. Okay? If it's paying a dividend on this date, that's my main concern. Okay, here, look at Albemarle, Devon Energy, Coca-Cola, Macy's, T. Rowe Price, Waste Management. There's about 5 different industries there, totally all different. I don't separate them in sectors. Okay, if they're paying a dividend and they're increasing and they're consistently increasing and they go up before the dividend date, well, that's what I'm looking for. What do you think about okay? The people on Yahoo say I'm a clown. Okay. Darben Lee. Why? Dina. GS. Goldman Sachs. What do I want to look at Goldman Sachs for? GS. 487. A little pricey. Okay. But take a look. A little too pricey for me. Okay. Your high is here. She drops down. Shoots back up. Now she's coming back down again. It's at 430. The 430s aren't even on there. 480, sorry, 487. Let's go for 570. That's over 1%. Well, cool. But here's a question. Do you really like Goldman Sachs? Well, let's see what kind of dividends Goldman Sachs pays out. Nice. Look at that. Hey, Goldman Sachs has dividends all the way to 1999. 12 cents. Oh, look at this. 1999 to 2003. What is that? 6 years of no increasing in dividends? That makes me a little leery. Then she jumps to 25 from 2003 to 2006. 3 years of no increasing on dividends. Then it goes from 35, 2006 to 2008. Well, another 2 years of no increasing in dividends. Goes to 47, then back to 35, and then we're still at 35 to 2012. Right, then it's consistently going up. All right. So the question is, do you like Goldman Sachs? Well, I don't like it because it's not consistent. I don't like inconsistencies. There's too many other companies that do have consistency. I'm taking all my Walgreens stocks and put in a separate account for my nephew's college fund. Alrighty. You probably get this question a lot, but would you prefer dividend stocks for a 20-year-old or growth? Well, Joseph, it really depends on what kind of a person you are. Okay? Do you want to retire early? Or do you want to keep on working and just let your money grow and just, set it and forget it? Set it and forget it. Just put it in there, let it grow, and not do anything. Which is perfectly fine. There's absolutely nothing wrong with it. I mean, that's why the stock market, that's why, that's what people usually did in the stock market. They buy something, they hold on to for decades until they needed the money. College, buy a house, maybe retire, that kind of stuff. I do it for weekly cash flow. Totally different strategy. But look at it this way. The more time and effort you put into it, the more you're going to get out of it. Okay? So if I sit in front of my computer, I can make a lot more money. But that's not what I'm after. I'm after simplicity, safety, consistency, and predictability. Okay? 60 years old, I have no desire to go back to work. I could if I wanted to, but I've been working since 1973. I'm kind of enjoying the time off. Okay, I retired in November, so that's what, November, December, January, February, March, April, May, June, July, August. 11 months. Cool beans. 11 months. Not even a year yet. And I'm still not used to it. I wake up in the morning and I feel like I should be somewhere doing something. But I don't have to be anywhere and I don't have to do anything. Which is kind of strange for me. I'm still trying to get used to it. All right. That being said, let's progress forward. Can you recap your strategy? Lorenzo, how are you doing? Lorenzo, my strategy. Okay, simple. All right. My strategy, briefly, I want to invest in a good quality dividend stock that increases the dividends for more than 20 consecutive years so I can write a covered call against it, capture a 1% weekly return consistently, safely, and simply, and that comes to over 50% per year. Have kids here, so that's that. Oh, I get it. My kids are down here in Florida, that's why I'm here. Jerry, yes, they said it's going to be like Rite Aid and fizzle away to nothing. Well, Jerry, I'm going to have a difficult time with that one because Rite Aid is not as big as Walgreens was. Is. Rite Aid was never as big as Walgreens is. Thanks. Wow, I'm not getting anything done, just answering questions all night, which is fine by me. Wow, I missed all these questions. Okay, here we go. Caught up. Jerry Baird, don't think you can be making $450 a week on 2,500 shares. I have no idea what you guys are talking about, so I'm going to ignore that one. Is Robinhood a good platform to try options? Yes and no. Okay, now Robinhood is easy to use. It's right in your palm of your hand. It's really simple. But here's the thing when it comes to options in Robinhood. Okay, on Thinkorswim, which is this one here, I can sell an option, all right, and it will expire worthless, and I don't have to do anything, and I don't have to pay a commission when it expires worthless. I like that. Robinhood, they will not allow you to let an option expire worthless, which means Friday afternoon, at some point in time, you have to buy it back, and you cannot wait after 2 o'clock. You have to do it before 2, because after 2 o'clock, they will do it for you. They will charge you a commission, and they will not give you the fill that you would like to get. So I like Robinhood, and then again, I don't like Robinhood. It is what it is. What's your strategy again? I'm not doing that again. I just did it twice. Call option goes up when the stock price goes up. Right. Kelly, how are you there in New York City? I haven't heard from you in a while. Okay, you were here regularly for a while, then you disappeared. Darbenly, DPZ. You keep asking me some weird shit, Darbenly. You do. DPZ. Domino's Pizza. $400 a share. 404, looking at the 405s, paying $370. Okay, so you get your 1% on Domino's Pizza. But let's see how well they increase their dividends. For that, we go to Yahoo Finance. DPZ. Oh, look at this. They do pay dividends. Holy cow. Domino's Pizza started paying dividends in 2004. That's 20 years of dividends. Okay, 7 cents, 10 cents, to 12, to 20, 25, 31, 38, 46, 55, 65, 78, 94, 110, 121, 151. Nice! I don't think Domino's Pizza's on my list. Okay, so let's take a look at it. DPZ. First thing I want to see, here's the high, here's the low, here's where it was, here's where it is, and it's currently going down. All right, well, let's take a gander at it. Okay, a year ago we were at 393, double bottom at 330, got a top at 542, had a little bit of a gap down from 472 down to 400, lost 72 bucks in 2 days. That's gotta suck. Okay, last 30 days. Okay, what do you think? Last 30 days. She went up, and she's coming down looking for that new bottom. So I'm going to say no to Domino's Pizza until it finds its bottom, and then I'm going to say no to Domino's Pizza because it's out of my price range. I like to stay $250 and below. It's a lot easier trading. Numbers work a little bit easier for me. But if you like Domino's Pizza, cool beans. Jordan and Company. Could you briefly explain what diagonal covered single stocks when you place a trade? Oh boy. All right, first off, Jordan. Here we go. Take a look up here. Single. Let's open this up further. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, butterfly, condor, iron condor, vertical roll, collar with stock, double diagonal, unbalanced, deep in, wide. Those are all the different trading strategies you can implement, but risky. Because here's the thing, with a calendar, you're buying a long call somewhere way out in the future and you're selling a current one. Nice returns, however, both options go down in value. So it's nice to, here we go. The feline vine, Howard, what do you think about poor man's covered calls? Well, seems way less risky than covered calls. No, because here's the thing. That's a calendar spread. So if I'm going to buy January 2025 call option, let's take a look at what we're looking at right here. Here we go. And let's go to 6. All right, that makes them more space. All right, hypothetically speaking, the poor man's covered call, what somebody just asked on YouTube. Let me explain briefly. Okay, right now the stock's at 404. I can buy the 400 for $34.50 a share. That's a lot of freaking money. However, I could sell the 400s for $640. Well, that's a nice rate of return. It's a higher rate of return, but here's the thing. This is going to go down in value, and this is going to go down in value. Okay, so you have to look at the delta and you have to look at the, there's another one of those Greeks. As the time passes, the valuation drops and drops and drops. Yeah, sometimes it works, sometimes it doesn't, but it's extremely risky because at some point in time, they both expire. Now, a covered call, the stock never expires. Once you buy a stock, you own it until you decide to sell it. There's no expiration date when you buy a stock. With options, there is. So, Jordan, I only teach one trading strategy here and only one. Now, I do have other accounts that are more complicated. I stick to one here to make it easy and simple. And holy cow, we're at 10 past 11. Oh, I see. Thank you. You're welcome. Thoughts you'd say yes after a 5% payout. GL. What is GL talking about? Hey, GL, I have no idea what you're talking about because I get so many conversations going at the same time. Why do you say no monthly, not profitable? Okay. Why do I say no monthly, not profitable? All right, let's check it out. Here's O. Everybody likes O. They pay a monthly dividend. Yay. All right. They're currently at 62.27. Okay, the closest one you're going to get is a 62.50, and it's going for 80 cents a share. 80 cents a share. Let's actually do the math. Okay, at 80 cents a share, my purchase price is 62.27. 62.27. That gives me a grand total of, whoops, I hit the wrong button. Let's try it one more time. 80 cents a share divided by the purchase price, 62.27. All right, I'm getting what? Okay, are you watching this? Where is he? GL, are you watching this? Jesus loves you. Oh, Olivia, thank you kindly for that. Feline, I feel like these daily silly questions are getting to you. Sometimes they are. Okay, GL, you ready for this? This is why I don't like monthlies. The current price, 62.27. If I buy it tomorrow, 62.27, the closest strike price is going to be the 62.50. Great. I'm collecting 80 cents a share. 80 cents a share is 1.28%. That's 1 1/3 for the month. Now, if I take that and multiply it by 12, because there's only 12 months in the year, I'm getting a whopping 15% per year. Ask me if 15% is better than 50%. I'm waiting. Is 15% better than 50%? Because weekly optional stocks, I get 1% per week. There's 52 weeks in a year. There's only 12 months in a year. So if I'm getting 1.5% on this company, 1.5% multiplied by 12, that's only 15% per year. That's not better than 50%. Okay? And what makes it worse is I got 17 trading days. That's 3 weeks. Here we are here. 3 weeks ago we were here. 3 weeks before that we were here. So from here to here, great. Where do you think it's going to be in 3 more weeks? I don't know. Do you think it's going to consistently go up for 3 more weeks? I don't think so, because it's already been up, 1, 2, 3, 4, 5, 6, 7. 7 weeks. Okay, went up, pulled back, 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 up. Okay, I don't like them. They don't pay the same. The numbers just don't work. Okay? And hopefully that's the last time I have to go over this tonight. Because I know I'm going to have to go over it again maybe tomorrow night. Because somebody always says, well, why don't you like monthlies? Because they're not as profitable as weeklies. I can ask a 3rd grader, do you think 12 is higher than 50? No. 50 is higher than 12. Always has been, always will be. Yes, for the most part. All right, more questions. Kimberly Clark is a consumer staples. Okay. Okay, just different ways to purchase. Got it. Single, covered, and covered is all he discusses. Okay, thanks for that. I'm a CFP. I have no idea what that means. Certified. All right. You're right on the dividend. Thank you. That burp was disgusting. Thank you, Jerry. I have gas issues. Sorry. What do they call that? GERD, I think it was called. I don't know. Kenny, do I trade dividends only or dividends and earnings? I stay away from earnings. Okay, I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. I've never seen a 100% accurate earnings report. Never. They go up or they go down. Single just buying. A redneck single is actually buying the option, not the stock. Okay, so when you're looking at option trading, see how it says single? That's just for buying and selling options. Nothing to do with the stock. Covered calls is when you buy the stock and sell the option. That's when they come together. And then you get the Strauss and Strangles. That's when you get the stock. Yeah. All right, sorry. Kelly Smith. Tay James does not pay attention to earnings, but they do sometimes roll together. Yes, they do. Do you see any possible future growth for Verizon? Well, of course. I feel like you are giving up on Walgreens. Me? Oh, hell no. Macy's. Dina. I like Macy's. I do. It's my favorite stock of the year. Macy's. What did Macy's? Oh, Macy's was up today. Cool beans. But not up higher than yesterday, Friday. Alrighty. Well, let's take a look at Macy's. We haven't looked at the stock in a while. I'm answering. Holy cow, I get 63 more questions. Alright, well, here's Macy's. Here's the high, here's the low, here's where it was, here's where it is, here's the current direction it's going. It's currently at $15.54. The 15.50s are 11 cents for this week, but next week, 35 cents. More than 2%. Dina, Apple. Do you know your Sharpe ratio? Ooh, no, I do not. But ask me if I care about my Sharpe ratio. Or ask me what a Sharpe ratio is and why should it be important. Beverly, do you think it's safe to keep buying it? Assuming he's talking about Walgreens. Okay. How many shares did trade in Walgreens today? WBA. 27 million shares. I can't. By the way, how do you like your experience at Robinhood? I like Robinhood. What kind of laptop should I buy for beginners trading? I was told my MacBook isn't really compatible. Yeah, those MacBooks aren't that good. Z Mayer of Budsburg. Okay, win. WYNN. Cool beans. William, I've never had a contract not get bought. Neither have I. Jerry Beard, why Lenovo? I've got a Lenovo. Iron Condors. Yep, Iron Condors is a trading strategy because they make best computers. Cool. Jerry Beard, yes, Lenovo is a solid buy. Yep, Jerry Beard, I will buy one tomorrow. Cool. Theta, that's the one I was looking for, the Theta Decay. Not the Vega, the Theta. Theta, yep. What they said, yep. What do you think about credit spreads? Ooh, I like credit spreads, but here's the thing. With a credit spread, you've got to be right 3 out of 4 times, because if you're wrong once, it's going to take 2 or 3 to make up for that loss. Yes, I need simple thanks. There you go. Hey, Hollywood's coming in. How you doing there, Hollywood? Okay, do you just do this for a living? Mindy, I don't do anything anymore. Okay, I've been working since I was, holy cow, how old was I in 1973? I think I was 9 or 10 years old. Okay? I've been working since 9 or 10 years old. Okay? I grew up in the age in 60s, 70s, and 80s. Yeah, we went to work early. Is selling covered options a good start? Arab Shield, how are you doing? I've seen you here before. Now, It's a great place to start because you're buying a company, you're buying a stock, and you're selling it for almost the same price you bought it for. Let's take a look at Walgreens for a second. Walgreens, let's find it out because people get bitchy and moany about Walgreens. Look at Microsoft, MSFT. Okay, we all know who Microsoft is. Okay, so Microsoft, $400. Let's say you like Microsoft and you decide to buy it. Right at the moment, it's $409 per share. Okay, so if you buy some of this at 409 and you sell it to someone else at 410, or you're collecting a 1%. Now 1% is not a lot, but if you collect 1% every single week, you're buying it here, which means you like the company. Never buy something unless you like it and you understand it. Okay, so don't buy something you have no clue who they are or what they do. It just doesn't make sense, in my humble opinion. Now, if you buy it here, you're selling somebody the right, not the obligation, the right to buy it from. It's kind of like a privilege. I'm buying it for 409, but I'm selling it to you for 410. All right, 409 is the current price. The closest strike price, because this is a call option, $410, and that's going from 475 to 405. That's almost 1%. You get to keep that. Now, if it goes above 410, well, you get to keep this plus the additional difference between this and this, so you're making more money there. Now, this strategy is specifically for a 1% return on a weekly basis. Hey, Scotty, how are you doing today over there? So it's for a consistent weekly return of 1%. Now, if I wanted to sit in front of my computer and make more money, I could. But I'm not at that point anymore. I'm retired, so I want to spend my time with my kids and my grandkids. Okay? I was outside today. I actually made some homemade salsa and some homemade guacamole today. I was outside planting plants today. I actually enjoy doing what I want to do. It's kind of like a weekend consistently. You know, you do what you want to do. And I think yesterday I mowed the lawn and edged the driveway. Okay, so I like that. It's simple, it's easy, it's particular. 86, you just got here, dude. Cool beans. Yep, he's retired, so he does it for income. Yep. Andrea, it's called acid reflux. Yes, it is, and it's horrible. And yep, they gave me some medication to take it, but you know what? I don't do medication. I prefer to wake up dead one day. I do. I don't trust the pharmaceuticals, and I do not take any of them. I drink water with honey and lemon. And that does soothe it soothes it. It doesn't cure it. Quarterlies. Sustain better growth. I was assuming you weekly trade after EX date. No. I trade before the EX date. I want to be able to do this for a living. Well, Mindy, it's really not that difficult. Okay, you need to get a certain amount of money. It's easier, Mindy, if you work the equation backwards. What do I mean by that is figure out how much you need to live comfortably. Now, comfortably is subject to what you want, how you want to live. Okay, if you want to fly to Dubai every weekend, go to Paris and go all these fancy things, you're going to need a shitload of money. Fine. Whatever you think you need on a monthly basis to live comfortably, that's what you need to make. Now, in order to make that with this particular strategy, well, you get 1% per week. So hypothetically speaking, if you need $5,000 or $10,000 a month, well, you need at least $250,000 in order to get 1% a week, which is $2,500 a week, which would come to $10,000 a month. If you need more than $10,000 a month, well, you might have a spending problem. Or you just might have to come up with more money. But simply, safely, predictably, and consistently, 1% per week. Okay, what I show you here, where are we? Right here. Okay, I show you 3 accounts. All right, account number 1, I started with 117. It's currently at 142. Account number 2 started out with 100. It's at 167 at this moment. And this was from the beginning of the year. This is not 5 or 10 years ago. Because at the beginning of every year, I start it back at 0 so you guys can actually see it accumulate over the year. This account here was started with 100,000. It's at 131 now. It's only two and a half months old, a little less than 3 months old, but it's up 31,000 in 2 months. Okay, all the trades are right here. Now you can see what I make on average. Okay, week number 28. Week number 28, 5.2, 1.3, 3.8. All right, and here we go. Guess what? We'll go back to 2. Okay, week number 27, 3.3, 1.7. That's on a weekly basis. Okay, week number 26, 1.5, 2.86. They're online for you to see. Take a look at them if you like. Those are all the trades I've done this year. All you do is just click on them. It pops up. It gives you the date. Okay, 6/24. That was what? June 24th to June 25th. That's the week of the 25th, 24th, and 25th. Okay, Kohl's, Macy's, Bitto, MPW, FCX, Bitto, Kohl's, and AEO. Okay, those are all the stocks. These are all the trades. The green are the buy and the reds are the sells. Every single trade I do is logged live for you guys to read. Now, I did, for the past 4 years, have a podcast, okay, where I did all my trades live every day. Okay, here it is right here. There's over 900 episodes. Okay, over 900 episodes. I don't do it anymore because the stupid podcast company changed, and it doesn't allow me to keep joining in, and I have to start over again. No, thank you. Now, a little peeved about that. 4 years worth of podcast live every day, and then they change on me. Yeah, I hate that. Thanks for knowledge, GL. You're welcome. Which group? I have a morning trading group, Mindy. Okay, I have a morning trading group. It's $100 a month. You get to look over my shoulder as I do my live trading, and then you can ask me any questions you want. 5 days a week for a whole month. That's only $100 a month. It's well worth it for people who actually are serious. Okay, which group? Do you know your Sharpe ratio for your portfolio? Adrian, I have no idea what that is. Okay, I know what I have in my account, and I know what I make on a monthly basis. I'm not one of those who dot the I's and crosses the T's. Sorry, I didn't grow up that way. What's your think about NASDAQ future? Oh, never really thought about it. Hollywood, I just keep buying Walgreens and making covered calls. All right, that works. Do you ever do dailies with SPY or Qs? Nope. Still working with the damaged screen, I see. Well, believe it or not, you can see it right here. Here's my other television screen right here. Okay, I just so happen to have bought it, and it doesn't have a stand, and this doesn't stand on the bureau, and I don't want to I have to mount it on the wall. So it's one of those things I got to get to. Edis Eldon, 410 minus 409 doesn't make 1%, but 0.24. Huh. Well, let's do a little bit of math, okay? 409 is the current stock price, right? 409 the current stock price. The strike price, 410, for 3 days is 375 to 405. Okay? The 410 for 2 weeks is 865. Well, let's go for this one, just for the fun of it. 410, 375, okay? 375, you got that? $3.75. Now the difference between 409 and 410 is $1. So you add $1 onto the 375 to come up with 475. So let's get the calculator, because apparently someone doesn't like my math. Clear that. So we're going to take the number right here. See it? 375, that's the profit at 410. What is it? $3.75. Now, if the stock goes above 410, I will collect the difference between 409 and 410, and that comes to $1. So if we add the $1 to the $3.75 we already collected, okay, plus $1, come to a grand total of $4.75 per share. Now, hypothetically speaking, $4.75 is my profit, but what is my cost basis? My cost basis is $409 per share. So I divide it by $409. I come to a grand total of 1.16%. So you're absolutely right. It's not 1%, it's 1.16%. Okay, Eldon, you're forgetting the premium. The premium is $3.75. The difference between the purchase price and the strike price is $1. You add the two together, that's $4.75. That's the profit. Well, profit, you have to figure out the percentages by dividing it by the purchase price. What did I pay for it? I paid $4.09. Okay, 409 what is it? 475 divided by 409 is 1.16%. Okay, I've been doing this for a while, but I'm glad you checking me on my math. It is 11:31. Time to quit. So let's briefly go through the rest of these questions. I'm going to call it a day. Good morning, Jeff. What is that? Is that green, white, green? It is. It's green, white, green. All right, Jeff, where's that from? Some sickness, you do medicine, though. Sorry, Aaron. I just assumed I didn't take medicine. Sorry. I just don't trust them. Because they say this is what it's for. But what are the side effects? And once you put that crap into you, you can't get it back out again. And if you do your research on the current medical establishment, it was created by John D. Rockefeller. Ain't the nicest guy in the world. And you are drinking orange juice, which is acid. No, lemon. Lemon, honey. Water, lemon, and honey. Speaking of Big Pharma, I got fired for not getting vaccinated. I hate my ex-boss. I got threatened for getting fired if I didn't get vaccinated. So I got vaccinated, and I never forgave him for doing that for me. Company didn't give any F about my family situation after 19 years on the job. Sorry about that, dude. Some people are you're in New York, dude. That's Democrat. Those people are just freaking backwards. Don't get me started on politics. Don't get it. Yep. Elder Rube sign. By owning 100 shares, you can sell a call. It gives you your 1% premium weekly. Thank you, Wilder. Try a vitamin or acid for acid reflux. I sent you. It should help. Thanks, Wade. Rubenstein not accounting for the 0.24% against if went up a buck. Okay, thank you. Friend told me there's no point to day trade since banks determine where the stock goes. Thoughts? Interesting. I always like these conspiracy things. Now, banks don't control the stock market. I would say it's more of hedge funds and what do you call those other traders? Institutional traders. Okay? Now, I'm going to agree with you, but here's the thing. If you know there's a dividend coming up, now dividend is the portion of the profits given back to the investors. Great, that's us. That's me and you. We are the investors. Now, if the stock always goes up just before the dividend is paid, well, they have no control over that. Have you heard of the new trading social apps called After Hour? Nope. Let me go back. I missed some questions. Try the vitamin. Yep. Friend told me. Yep. HP. In your opinion, what coin would be best to invest in right now? The Walking Liberty. How do you have a split screen and Thinkorswim chart on one side and option chain on the other? Oh, mean kind of like that? Over here, there's a little tiny arrow. You click on this little tiny arrow. This bar right here, you can click on it and you can move it anywhere you want. All right, couple more questions. JFIN, yeah, yep, uh-huh. Jeff, you're from Nigeria. Cool beans. Maine's going to be a no. Had an old doctor say mustard helps acid reflux and heartburn. Cool, I think I'll do that. This company has a 17% yield, JFIN. Oh boy. I love it when people give me advice. I do. I mean, don't get me wrong. I take advice when it's worth it. JFIN. Yeah, hell no. Okay, now, you think JFIN is a 17% yield? Great. It has monthly options, which means I can only do a covered call once a month. Okay, great. Let's go down and take a look at the yield. What kind of a yield does JFIN give? JFIN. Oh, well. Okay, so who gave me this piece of crap? JFIN. Who said something about JFIN? Who was it? I need to know who to yell at. Here we go. Aaron. Aaron, you ready for this? Okay. JFIN has 3 dividends. 40 cents, 40 cents, 50 cents. 3 dividends. You like that one? 3 dividends. That's it. No consistency there whatsoever. Any new company can give you a shitload of dividends in order to get you a high yield. Yeah, 17% is a high yield. But how long have they been doing it? 3 years? Come on, there's no consistency there whatsoever. But wait, we haven't seen this yet. It is a 17% yield. Look at it, you got a 90-cent dividend, and that's a 17.68% yield. Okay, the company's only been around for 2 years, 3 years, is that right? Okay, so they started paying a dividend in July 2023. They only had 2 dividends. Yeah, hell no. Okay, I don't know what the hell you're smoking over there, Aaron. Seriously. Asset managers, hedge funds. Yeah, that's probably them. Boom, 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 boom. Fabio, Alex, blah, blah, blah. X Layrock, do you have a bad boy mower? I have a Ryobi. A Ryobi electric mower. It's freaking awesome. It's quiet. It's a touch button. I don't have to pull to start it. It's great. You just pull the lever and just hit the button and it starts right up. When I'm done, just let it go. It's cool. Hey, look at that. We're done. How many different stocks you hold? Just so divvy. Oh, Tony Tiger. Well, let's take a look. All right, here we go. In this particular account, we have 1, 2, 3, 4, 5. This particular account, we have 3, 8. This account, we have 7. Oh, look at that, 5, 7, and 8. Okay, that's the 3 companies. That's the 3 accounts I share with you. Now remember, I get 7 accounts. 7. I only share 3 of them with you guys. Okay, I'm a nice guy, but I'm not that nice, sir. Have a good night, and everyone else. We are below 200. That means out of here. You guys have a great night. I'll see you again tomorrow. And you guys down here, have a great night, and we will see you again tomorrow.